very good afternoon to all our viewers. You have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, this is the show where in the next 1 hour we're going to be telling you all the stocks that are buzzing in trade today, either on the back of the news flow or on the back of the technicals. To spot those breakouts and breakdowns, we'll connect with our technical expert as well as the team of researchers, and Vinny and I will also take you through the stocks as well. But before coming and starting the list, let's have a look at what the markets are up to. So Vinny, today is the weekly options expiry, but the benchmark indices continue their rally upwards.
Absolutely, continuing that rally, and look at the chart, Shrishti, that is just there here. You can see that how Nifty has moved up and gained and picked up the traction and almost at the day's highest point as of now. Nifty trading with gains of almost 0.3% in trade. Sensex 2 following that same tandem and trading with gains of almost 0.28%, almost 0.3% in trade as well. In terms of advanced decline ratio, it's currently in the favor of advances than the declines. Mid cap, small cap space. Let's look at what the broader markets are doing. The Nifty mid cap has picked up steam as well. It's up almost 0.8% in trade. Clear outperformance coming in from the Nifty mid cap for the markets as of now, and trading at the day's highest point as of now. Moving on to the small cap space, that too is gaining steam, almost up around a 0.7% in trade, and that's the Nifty small cap. Let's look at what the Nifty Bank is doing. Was trading in the green as well. Seems like it's continued to hold on to those levels as of now as well, and yes, up 0.2% in trade. Now, what's not doing well today is the Nifty FMCG, which is down in trade. FMCG is down almost 0.1% to 0.2% in trade, around those levels. Other than that, the Nifty IT, what's that doing? That's the one to watch out for. Next week, we'll be having the IT companies that will start reporting their numbers. Nifty IT as of now is down 0.3% in trade. We have the Nifty Realty that is gaining in trade among the top sectorial performance and up 2.57% as of now. Other than that, we also have the Nifty Media, which is holding on to strong gains today. So let's not forget about that one as well. Nifty Media holding on to strong gains over there. Also, we have Reliance, and I have to mention it before, is that Reliance Industries is gaining in trade today, and that is also leading to the up move that is supporting in terms of the Nifty 50 as well. And as of now, you can see Reliance is trading with gains of almost 1.6% in trade as of now. But on that note, let's get started with all those stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. On the technicals, now we're joined by Kunal Bothra, while from the research team today we have Amakshi as well as Ashesha joining in with us. A very good afternoon to all three of y'all. Good afternoon to you as well, Shrishti. And I'm going to be starting with the first stock. Let's talk about an FMCG player. We have Adani Wilmar that is in focus. They came out with the Q1 operational updates. When you look at the operational update that has come in for Adani Wilmar, seems like an okay and a decent volume growth is what they're expecting. 25% double-digit volume growth in terms on the year-on-year basis. Sales volume, that's where we're seeing a decline coming in, which is reflective of a sharp decline that we could see in the edible oil prices. And the food and FMCG business, that has seen a strong revenue growth of 30+%, more than 1,000 crores in terms of the revenue. So interesting in terms of FMCG growth, but other than that, when you look at it in edible oil and industrial essentials, in terms of sales value, that's seeing a decline. So that is something on a year-on-year basis we're keeping an eye out on. Now, in terms of the commentary that came in Q1 update on the rural as well as the urban growth, they said that some of the areas, both rural and urban, have actually witnessed strong growth over there, and overall oil and food have recorded a 50+% volume growth as well. So keeping an eye out on that one. Industrials also a 20% volume growth as well. Now, what is impacting the industrials sales growth is the steep correction in the prices of Ole as well as castor products, which is impacting the sales value over there. High cost inventory on for the falling edible oil prices has exerted some pressure on the profitability for the company in Q1 24. It was similar trends that we saw coming in FY 23 as well. So on the back of this, let's keep an eye out on Adani Wilmar today, Shrishti.
Okay, moving on, and let's shift focus to Pyramidal Pharma. Now, this stock has been buzzing in the recent past. If you see the 1 week chart, then the stock has shown a good up move, but today the stock is a bit under pressure, and that's on the back of block deals, like big block deals in this particular name. And on an intraday basis as well, beg your pardon, the stock is holding a gains of 2.5%, and this particular counter has seen block deals worth of 7 million shares, and that totals around over 2.5% of equities that has changed hand. In the evening, we'll keep a track out on who are the buyers and who have been the sellers, but on the back of this block deal, because the block deal happened in the morning itself, and that's why maybe you are seeing the sharp spike on Pyramidal Pharma, and that's the counter that is buzzing in trade today.
Absolutely. Surely keeping an eye out on this one, and what are the names that actually come out in terms of the buyers and the sellers will be important to watch out for. Let's move on, and the first stock on the technicals, and Kunal, you've picked out Gail for us. In terms of charts, what is the indication that you're picking up? Last 6 months, it's given 13 to 14% return. What is the upside that one could actually see for Gail now?
Good afternoon. Bulk of the returns for Gail has actually happened in the last few trading sessions, where many of these energy-related stocks or in gas space have actually done reasonably well. And the reason for flagging off Gail today is the stock forming a bullish pattern on the daily charts. It's come back after months of consolidation, and I think more importantly, the stock has come back towards the upper end of the Bollinger Band, which again is an indication that possibly the major consolidation for Gail is over. The PSU sector, the energy stocks, the oil and gas space, they have been doing quite well for themselves in the last few trading sessions. So I would believe Gail could also be a classic price volume breakout at current levels. Traders could look at a buy at this range of 108.5 to 110 for Gail, and potential targets which I would probably keep for the stock would be closer to 120, 124.
Okay, let's shift focus to the banking space now, and DCB Bank. Vamakshi, this is the first stock that you wish to highlight. The stock is witnessing some stellar gains in today's trading session. Tell us the news flow.
Srishti, you're correct. The stock is definitely surging in the trading session today, and that is on the back of an announcement that came in post-market hours yesterday. And the company announced that the RBI yesterday had granted its approval to Tata Asset Management Private Limited to acquire an aggregate holding of up to 7.5% of the paid-up equity capital of the bank, and this will be done through the schemes of Tata Mutual Fund. Now, keep in mind that the approval is valid for a period of 1 year from the date of the RBI letter. So that is the news flow surrounding DCB Bank, and on the back of this news flow, from the get-go, the stock was a buzz in the trading session today. As of now, it is trading very close to the day's highest point, up nearly 7% as of now.
Okay, that is DCB Bank for you. Let's move on and talk about Apollo Tyres. Kunal, this one, do you think now, after the 25% return currently at 409, it is still a good buy for anyone who's looking to enter the stock?
It's a strong tire name because the stock has moved up in its trading range from 300 levels. I remember when the stock had given a big breakout on a multi-year basis from those levels to 340 and then 380. And now the stock is comfortably above the 400 levels. In fact, if you look at the last 1 or 2 weeks of charts, the stock has had many phases of intraday as well as short-term corrections. But then closer to 400 levels is where we've seen the correction getting absorbed and the stock seeing a reasonable bounce back from that point. So I would believe Apollo Tyres could be a good risk-reward play even from current levels. 400 could be a closing-based stop loss, which I think traders can keep. The risk-reward could be very fruitful from current levels, and 440 on the upside could be an immediate target for the stock.
440 for Apollo Tyres is what Kunal is targeting. Moving on, and once again, let's just focus to the pharma space. And Shrisha, a lot of pharma counters are buzzing in. One such name is Biocon. Tell us what's the news flow on this one?
Well, yes, the stock is sitting with gains of over 2%, and that is because Biocon Biologics, which is a subsidiary of the listed entity Biocon Limited, has completed the integration of the acquired biosimilars business, Viatris, what it has acquired. Now it has been completely integrated. The company also said that it has integrated in over 70 countries and emerging markets with effect from the 1st of July. And the company said that this will increase the scale and scope of its business. This marks the first wave of countries where Viatris operations have fully integrated into Biocon's biosimilar business. So on the back of this news that has come in with respect to integration of this particular business, the stock is in focus today. In fact, as we speak, it is gaining over 2%.
Okay, keeping an eye out on Biocon. Let's move on and talk about Tata Power. Now, Tata Power is in focus on the back of an order win that they have, and we're seeing the stock gain steam and pick up steam and seeing gains of as much as 2.5% as of now. Now, when you look at it, this order is for smart metering project, which is worth around 1,744 crores, and this is in Chhattisgarh. The order has been awarded by the Chhattisgarh State Power Distribution Company Limited to Tata Power, and on the back of this, we're seeing today Tata Power is buzzing in 2.5% gains coming in there, Shrishti.
But a lot of power names are definitely seeing that powering up rally, and Kunal, even Tata Power is on your radar. How are you seeing it on the technical front, and what sort of a target should one be looking at?
Yeah, today seems to be finally a day of a breakout for Tata Power. It's been a huge underperformer, relatively speaking, in the last 6 months or so. But I believe it could be sooner than later for Tata Power to try and participate in this strong market uptrend. Stock breaking past about the levels of 220, 222, which has been a big resistance on the spot level. So looks very attractive as a potential trade on the upside, and would look out for a positional target of 250 to 260 now on Tata Power. So the risk reward, the trend now seems to be coming back in favor for Tata Power, and especially for positional traders, I think this could be a good entry point.
Okay, let's shift focus to another space that is buzzing in from the realty pack. A lot of counters are moving. One such name is Puravankara, and on the back of the operational date where the company has achieved its highest ever sale value of sales 1,126 crores, and that's in growth of 119% on a YY basis and 12% uptick on a sequential basis. The customer collections as well has seen a surge, 52% up on a YY basis and 5% uptick sequentially, where the average price of realization has seen a growth of 11%. Other than that, the company also informed that they have launched one new project in Chennai that's named Purva Ragam. And on the back of this particular news flow, the company is and the stock is definitely in focus, but even the management commentary is quite bullish, where they say that with a strong pipeline of the new launches, they are confident that they will continue to drive our pre-sales growth momentum and continue to see improvement in the business as well as the cash flow. And on the back of these updates, the stock is showing stellar gains today, up around 11% today.
Absolutely, surely keeping an eye out on this one. Let's move on and talk about the OMCs then. Vamakshi, today we picked out the full OMC pack. What is it that is keeping these OMC names abuzz today?
Well, Vinny, when we look at all these counters, they are buzzing in trade on the back of a positive brokerage note that has come in from JP Morgan. Now, JP Morgan has highlighted that the Indian oil marketing companies are in a sweet spot. Discounted barrels are aiding the GRMs, and in fact, the retail gross marketing margins are at record highs. Important to note that JP Morgan has increased their estimates across the OMC pack, and overall, Q1, in their opinion, should be quite strong across India's energy complex. So, given all these positive factors, JP Morgan has maintained its overweight rating on IOCL as well as HPCL. For BPCL, they've maintained a neutral rating, but very important to note that they have actually hiked the target price across all three counters. As far as IOCL is concerned, the target price has been raised from 100 rupees to 110 per share. For HPCL, the price is up from 285 to 330 per share, and for BPCL, the target price has been raised by 50 rupees to 400 rupees per share. So largely on the back of that positive note from JP Morgan, positive expectations as far as Q1 is concerned, and all these counters are surging in trade, as you can see.
Well, there seems to be no stopping for all these OMCs, but today we spoke with M.K. Surana, who is the former CMD of HPCL, as well as Dayanand Mittal, oil and research analyst at JM Financial, and they share their views on the OMCs and where they see the space headed. They also share the stocks that are looking attractive from the space. Let's listen in.
I believed, and I have said earlier also, that the oil companies are underpriced to compare to what the potential they have. Now, of course, market have got a way of looking at the things, but I think they are in a sweeter spot right now when the crude price is lower and the margins being weak, and possibility of crude prices remaining benign for some time.
We prefer gas stocks more as a secular story because the penetration of particularly the CGD companies, because the penetration is quite low for the CGD business in India. So we like IGL, Gujarat Gas, also MGL, though in that order. primarily because of secular volume growth story. Also, they have got a reasonably decent pricing power, though not as strong as it was 3 years back, but still CNG is 40-45% cheaper versus petrol and about 30% cheaper versus diesel, which is decent enough for the convergence to continue. So CNG would be a preferred pick. Among oil names, given our view of crude price being high, we particularly prefer upstream companies over OMCs for the moment. We like ONGC particularly because of reasonably strong dividend yield of 6 to 8% that they can deliver going forward as well. And valuations are quite reasonable at about 4 times earnings.
And keeping it with the oil and gas space, and Kunal, you've actually picked out IGL for us on the charts. When you look at it in the last 1 year from this 334 lows, the company's stock price has actually seen a recovery coming in here, and 489 is what the stock is at. What are the charts indicating now for this one?
So it's formed a rounding bottom pattern on the daily charts. You can also, we can also add it towards the inverted head and shoulder pattern for IGL on the daily charts, and today the stock seems to have confirmed a breakout of these kind of bullish patterns. Now these patterns generally indicate that the stock gets into a consolidation, and post the consolidation, whenever it provides a breakout, the next leg of uptrend could lead into a much higher high for itself. So the previous high for IGL was about the 515, 525 odd mark. I believe in this leg of uptrend, the stock should ideally scale past about the previous size of 525. Which means a potential upside of 6% to 6% for a stock like IGL. You look at the charts for the other peers, MGL, etc. Even these stocks are showing very similar kind of a chart pattern breakout for themselves. So the entire sector looks attractive. IGL could be a stock which I believe could head towards 525.
525 on IGL is what Kunal is looking at. But let's move on and let's talk about Hatsun Agro. Shesha, that particular counter is also in focus. Tell us what's happening here.
Well, yes, some divestment has come in with respect to one of its divisions. Yesterday evening, the company informed the exchanges that they have approved the sale of Wilmar division of the company to VKA Polymers Private Limited. This has been done at a consideration of about 135 crores. This transaction is done on slump sale basis, and the company has transferred all the assets and liabilities related to this windmill division. So on the back of this transaction that has taken place, the stock is in focus today. Important to note that the stock has underperformed the broader market index. In fact, on a year-to-date basis, the stock is up just a little over 4%. Today, of course, on the back of this news that has come in, the stock is gaining in trade.
Moving on to the next one, and stock number 12 for today is Hindustan Zinc. This one is a high-paying dividend stock, as you all know it, and Hindustan Zinc is in focus as they announced the company is going to be considering an interim dividend on the 8th of July for the current financial year, that is 2023-2024, and the record date for the purpose of the payment of interim dividend has been fixed on Saturday, July 15, 2023. Now, let's not forget, in the past 12 months, we've seen Hindustan Zinc actually declared an equity dividend amounting to around 75.50 rupees per share. So high-paying dividend stock, and that is why when they're making a dividend announcement or even meeting for this announcement, you've seen that the stock is already seeing a run-up today, and it's up 7% in trade as of now.
Well, yes, great moves on Hindustan Zinc, but one such counter showing great moves in the recent past, at least in the last 1 week, has been PNB. On the back of block deals today, this particular counter in focus, wherein 1 million shares have changed hands in a bunch trade, and that's why we are highlighting this particular counter, because the stock has been in a good run up in the recent past, and today itself on the back of the block deal, maybe some more momentum, and as of now the stock is sitting at with a gains of almost 1%.
Okay, let's move on and talk about an auto name, and Mahindra & Mahindra, Kunal. That's the one that you picked out for us on the charts. In terms of the last 6 months, 20% return is what we're seeing. Stock is at 1,527, recovered from those lows in the month of April. Is this a time that we could see a sharp run up now for M&M?
It's been a phenomenal last 4 years for M&M. 2020, on the COVID low, the stock was actually at 250 levels, and from there the stock has come back towards 1500 marks. So it's more like a 6x jump for a stock like M&M. And more importantly, in the last 6-8 months, the stock has gotten into a leadership stance from the entire auto pack. You look at the stock and the propensity of the stock to make a new high. Whenever that happens, the entire sector gets a strong sentimental push. We see many of the other beleaguered names, even these stocks, they managed to rise up higher. So I think M&M seems to be in a classic territory of its own, breaking past about resistances, psychological marks, 1400, 1500 now for itself. So looks as an attractive trade even from current levels, and for traders who have bought the stock at much lower levels should continue to hold on.
Okay, that's a hold coming in on M&M, a classic breakout on the charts. Moving on, and let's shift focus to KEC International. Vamakshi, this particular counter is also up 5%. Tell us, why is that so?
Well, Srishti, after a spate of order wins, KEC International again is in focus today on the back of an order win. The company has won orders across business verticals to the tune of 1,042 odd crores. And in fact, in these orders, there is one order wherein the company has won its first international railway order in the SAARC region. We also have a brokerage note that actually came in from ICICI Direct, and they have highlighted that KEC has been winning orders aggressively over the past 1 year. And definitely they believe that given the robust diversification and strong prospect pipeline of almost 1 lakh crore is what KEC does have, and in fact they also have a strong backlog in excess of 30,000 crore plus and order wins that I just mentioned, and that in turn will help the company to grow its top line at almost 15% on a year-on-year basis is what ICICI Direct believes. So given the spate of order wins that the company has been receiving over the last few years, in fact over the last 1 year, and the order win that the company did report yesterday, the stock is in focus today. As you can see, the stock is trading higher by almost 4%.
Okay, let's move on and talk about DLF. And Kunal, this stock today is trading at a multi-year high. And you mentioned, and we've spoken about this stock before as well. What is the upside now for this one? Because just in the last 6 months, I can see the charts on the right now, that is up 40% just in the last 6 months. Are you expecting a further run-up, or maybe now it's time that we could see some bit of a consolidation?
Yeah, I think further run-up is what I would expect for DLF. The stock has... so what happens is when a stock enters into a new range, it takes some time to break out because it gets adjusted to the new range. 500 was the new range for DLF. The stock had not broken this level since quite some time. We saw the stock consolidating for almost 2-3 weeks at this 500 mark, plus minus 10-15 point range. And today the stock seems to have finally broken past about this level of 510 approximately. So which means that this could be again a classical case of a breakout for DLF. My expectation is that the stock should perform exceptionally well over the longer term time frame. So with a time frame of 2 to 3 years, I would suggest a buy as well as a hold on DLF.
Okay, moving on, let's shift focus to the chemical space now. Shesha, a lot of counters are in focus. Tell us, what's the news flow on the chemical space?
Well, yes. So IIFL Securities hosted a couple of chemical companies, and on the back of that, they've come out with a note. Muted commentary has come in from the managements. First up, they say that they are bracing for near-term slowdown, while structural story continues to remain intact. As far as outlook for first half of FY24 is concerned, it continues to remain weak, owing to declining price trends that we have seen in the first quarter. As far as capex plans are concerned, they are largely intact. Gujarat-based PSUs have intensified their capex plans as we get into the next chemical cycle. Production ramp-up, meanwhile, remains critical for growth. IIFL has maintained its ad stance on the stock on Deepak Nitrite as well as GRFC, but largely the commentary is muted for across the sector. First half of FY24 is expected to be weak, and they expect some slowdown, and as a result of these commentaries that have come in, all of these three counters are in focus today.
Okay, keeping an eye out on these names. But we spoke to Sanjeev Prasad, the MD and co-head of Kotak Institutional Equities, and he's talking about auto is the most overrated sector and chemical and financials, I beg your pardon, are the most underrated. Listen in to what his rationale was.
The assumption that the market has, and whatever the valuation of pricing in that, whatever happened in the last 10 years will repeat in the next 10 years. That is, you will see high growth at high profitability for an extended period of time. I think that argument seriously needs to be challenged, and I suppose the volume growth will be there, but whether high profitability will sustain or not, I seriously doubt it. Given the change in market structure, the level of disruption you're seeing across sectors, I would be very surprised if profitability holds up in the Indian context, which means you will see a fairly sharp correction in multiples as and when they happen. Auto is clearly most overrated. Underrated, I don't know. It's not as if if you can find value in most of the markets, maybe financials, I would say. But having said that, it's a high-level sector. At this point in time, valuations are quite reasonable in the context of where they have traded historically. In most cases, multiples are actually lower than the pre-COVID levels, but the fundamentals are far better of most of the banks and NBFCs. So that's one sector where at least there is some value based on fundamentals.
Okay, but with this fears, it's time to slip into a short break. But don't go anywhere. We'll be right back to tell you all the stocks that are still buzzing in trade today. Stay tuned for more.